So, hi everybody. Today we talk about gold rise. Continue to rise. US stocks hit a one-year low. A weaker, a weaker dollar. Bonds go up while recession fears put the DGIA to its lowest seen early 2021, losing the sessions on June 16. The world spot gold rise increased by more than 23 to 1.858 an ounce. The market went up when the USD depreciated due to the prospect of the U.S. Federal Reserve Fed raising interest rates strongly. Yesterday, the corn fell 1.6% against a basket. One major currencies gold started to be unattractive because investors were worried about the U.S. economy go down, said Edward Moza, an analyst at OANDA, as the USD wrongly has peaked, and investors are now turning to haven assets, hitting the prospect of gold is quite right. So, okay, we talk about the now we continue to even recently previous metal have moved in the same direction as a stock and bond markets. But yesterday, gold rose again as a Wall Street lagged due to recession fears. Even so, the high interest rate environment is also not favorable for gold. If the Fed success in controlling inflation without pushing the US into the recession, the reverse metal will lose appear again. Warm Carson Mann, director of Next Generation Research at US Julius Power. The Fed on June 15 announced the strongest interest rate increase in nearly 30 years. Fear of inflation had also brought many other central banks to follow suit. Yesterday, the Swiss central bank unexpectedly raised interest rates for the first time in 50 years. The Bank of England also raised interest rates on the US stock market. The DGIA yesterday fell below the 30,000 mark for the first time since beginning of last year, and investors worry that the Fed move would push the US into recession. Losing the session, DGIA losses 2.42% to 29.927 points. The S&P 500 fell 3.25% to 3.66 points. Nasdaq Composite fell the most with 4% to 10.646 points. This is the lowest level since September 2020. Okay, next. So we talk about next one. Okay, the S&P 500 and Nasdaq Composite looking deeper into bear market. These two indexes have rough 24% and 34% respectively since their most recent peak. The DZII is also low to this. Low to this haven't rough 19% since the January peak. The new data released yesterday further showed that economic activity in the US declined. New home construction fell 14% in May, much stronger than the 2.6% forecast. The Philadelphia Fed Business Activity Index fell for the first time since May 2020. Home Depot, Intel, Walgreens, JP Morgan, 2M and American Express stock hit new 52-week close. Tech groups like Amazon, Apple, and Netflix are on down nearly 4%. Tesla and Nvidia lost the 8.5% and 5.6% respectively. Share of Airlines, United and Delta fell 8.2% and 7.5% respectively. The Cruise Group, Carnival, Norwegian Cruise Line and Royal Caribbean even blocking 11%. The entire S&P 500 major industry group well down. In the